Trump's big, beautiful bill is now law, and it's going to impact all of us in significant ways. And in today's video, I want to share with you the 10 top ways that I think it's going to impact all of us, in particular retirees and seniors. Let's jump in and talk about it. I want to start off with this article by Investopedia, 7 things retirees need to know about the big, beautiful bill. And the very first one that they talk about directly impacts all of us, which is the $6,000 senior deduction. And this is in addition to the standard deduction. Many of us take the standard deduction when we fill out our taxes. So whether we do the standard deduction or we itemize, we're going to benefit from this, but we have to be at least 65 years or older. But we do not need to be taking Social Security. Now, many of these provisions in the big, beautiful act, I guess it's an act now, it's a law, are going to be subject to income limits, adjusted gross income. And you can see these are what the limits are here. MFJ is just married filing jointly. The S just stands for single, and it expires after 2028. So this is impact in place for the next few years. Okay, let's jump into the next one. And for that, I want to go to the Social Security website. And Social Security says that 88% of beneficiaries could owe 0 federal taxes on their Social Security benefits. This is from the Social Security website, ssa.gov. The title of the article is Social Security Applauds Passage of Legislation Providing Historic Tax Relief for Seniors. And here's a direct quote from that website. The bill ensures that nearly 90% of Social Security beneficiaries will no longer pay federal income tax on their benefits. Okay, so I want you to stick around to the end because there's a lot of details here, and I'm going to share with you 2 tables at the end that will summarize everything that I'm talking about. Okay, let's keep going. The next one is, this is just if you itemize. This is if you're not using the standard deduction. So you can see the mortgage interest deduction. This was made permanent on principal balances of $750K or less. And the other one's known as SALT, which is the state and local tax deduction. And this has got a big boost, all the way from $10,000 to $40,000. Now, your modified adjusted gross income for married filing jointly has to be below $500,000 or it phases out. And then also importantly to know that it goes back to the $10,000 limit in 2029. So this is not permanent. Okay, next we're going to talk about tip and overtime exemptions, how that's going to impact us, plus a new way to handle charitable deductions that will benefit all of us. But first, I want to share a quick word about our sponsor. Our sponsor for today's video is a group called Chapter. They provide free Medicare advice for seniors, and so whether you're already on Medicare or you're about to go on Medicare, I think it makes a lot of sense to have the input of experts to help us make the right choice. The group that I'm proud to partner with is Chapter. This is the phone number you can reach them at here. And I want to share with you a comment by one of my viewers that shares why I'm so proud to partner with Chapter. Here's what this person said. Chapter, pleasantly surprised. I called thinking they would just try to push hard on some Advantage plan. The guy did not. He actually said that original Medicare and a supplement were the best choices. Not sure how he, Chapter, makes any money off of that advice, but their street cred sure goes up with me because I didn't get the expected car sales guy pitch. I don't want you to get the car sales guy pitch. What I want you to have is access to experts that are telling you what's best for you based on your situation. They listen first, and then after that, share what they think is best. And that's why I'm proud to partner with Chapter. You can reach them at this QR code here if you just want to scan it in, or this is the link here, askchapter.org/Azul. Okay, let's keep going. Now we're going to talk about the Tax Foundation. And their article is One Big Beautiful Bill Act. It's now law, tax policies, details, and analysis. And that's where I'm getting the next couple items. The first one they talk about, This is the way that charitable deductions, we're going to treat it differently. Right now, there's a permanent $1,000 above the line deduction for charitable contributions for an individual and $2,000. So for many of us that were using the standard deduction, our charitable contributions really didn't help us. We had to itemize in order to do this. And now, because it's above the line, whether you itemize or not, if you make charitable contributions, individual up to $1,000, $2,000 for joint filers. Okay, the next one, this has gotten a lot of press, is the tip income. There's a temporary makeup to $25,000 of tip income, deductible for individuals in traditional and customarily tipped industries for tax years 2025 through 2028. This also has modified adjusted gross income limits. The key here is traditionally and customized tipped industries, because the government doesn't want all of us claiming that our salary is now tip income. Okay, let's talk about overtime. The overtime, it's temporarily make up of $12,500, $25,000 for joint filers of the premium portion of overtime compensation, deductible for itemized and non-itemized tax years 2025 through 2028. This also has a modified gross adjusted limit. There's going to be two tables at the end that will help summarize all of this. Let's keep going. I do want a quick side note here. This is my viewpoint. The tip in the overtime exemption is reduced by $100 for each $1,000 of modified adjusted gross income above $150,000 for an individual, or $300,000 for married filing jointly. Okay, again, don't forget summary table to simplify all of this is coming up shortly. Okay, the next one is the auto loan interest deduction. This was a surprise for many of us, and you can see here, this is only for new automobiles with final assembly in the United States for tax years 2025 through 2028. The deduction is limited to $10,000 and phases out at a 20% rate when income exceeds $100,000 for single filers and $200,000 for joint filers. I want to stress here, final assembly in the United States, and also this is only for personal use vehicles. It's not for businesses. Okay, now I want to go back to this Investopedia article and go through a couple other items that is not based on whether you use the standard deduction or you itemize. So back to Investopedia. We want to be careful because there's some language in here about required minimum distributions, and they're about to get trickier, not easier. The One Big Beautiful Act instructs the Treasury to study the imposition of required minimum distributions on Roth IRAs. That's the first time we've seen that language. It doesn't mean the distributions are going to be taxable, but it could mean that we're going to start to have to take money out, whether we want to or not, from our Roth IRAs in large 401k balances. Okay, another one that applies for all of us is the estate tax exemption. It is going to be $14 million for an individual, basically, and $28 million for married couple, two people. That's in 2025, and then it bumps up to $15 million and $30 million in 2026 and beyond. And if the Trump One Big Beautiful bill had not passed, what would have happened is that estate tax exemption would have sunset back down to about $6 million per person. So this is a big deal. That would have been in 6 months that would have happened. And importantly, this is now permanent. Okay, let's keep going with this Investopedia article. There will be a bump in the standard deduction. This is just for people, obviously, that use the standard deduction. It's going to be $15,750 and $31,500 for married filing jointly. It's going to be permanent, and it now includes an inflation adjustment. I should mention that all of these things that I say are permanent just means that they don't automatically sunset. Another Congress, another Senate, another president can change all of these laws. Okay, let's keep going. Here's a bonus. I said there were 10 items. There's actually a bonus here, and I'm about to get to my idea on strategy, what all this means to you, and then also those summary tables. Okay, this is a bonus. The grandparents 529. Qualified 529 withdrawals now cover K through 12 tutoring, credentials, and certain caregiving certifications, while rollover rules to Roth IRAs survive intact. That rollover rule to a 529 was enacted a few years ago. That did survive this bill, now law, and that gives retirees new ways to fund grandchild's education without triggering the so-called FAFSA, which is the financial aid application, the grandparent penalty. So this will not trigger that. Okay, so what does this mean to you and I? What does all this mean? The first one is, things are becoming more complicated. We have more opportunities. The way you used to file your taxes in the past may change based on this. So I think it makes sense to touch base with an accountant and just go over your strategy and see, does it make sense for you to still itemize if you're itemizing? What about the 529s? Does that change anything for you? What about the potential for there to be required minimum distributions on Roth IRAs? Does that change anything? I also think it makes sense to go to a financial planner and talk about this. Today's tax rates, what this law did was it locked in the the Tax Cut and Jobs Act of 2017. So for the next 4 years, we know we have these relatively low interest rates in place. Does it make sense to do a Roth contribution now while tax rates are lower? And looking at what the government debt is, looking at how much is owed, can you envision a future where tax rates are higher? And you might have even been more glad that you did a Roth conversion, maybe. And for that, I recommend that you work with a financial advisor, or you work with somebody, or you work with software. If you're a do-it-yourselfer, I think it makes sense to pay the money for an account, to pay the money for a fiduciary financial advisor. But if you're a do-it-yourselfer and you don't want to spend that money, again, I think you should. That's the gold standard. The second best thing to do is to use software designed for you and I to think through these things. It's getting much too complex to build this in an Excel spreadsheet ourselves or in a Google Sheet. So I think it makes a lot of sense to use software. The software that I like is called Bolden. This is the QR code for Bolden here. I am an affiliate. This video is not sponsored by Bolden. It's sponsored by Chapter. Thank you again, Chapter. But this is the QR code, and this is the link for this. So again, the QR code here and the link. And if you use those codes, you'll be supporting the channel. Thank you. Okay, now for these tables that I talked about, I think it's really important. I'm going to share with you two tables. One's from that Investopedia article. The other's from a CNBC article. But let's go and look at this, and you can just slow the video down. Dates you need to know for the major provisions. You can see the 529 expansions, the car loan, child tax credit, all kinds of credits, when they go into effect, when they don't go into effect, when they cease to exist if they're not permanent. And then this is the chart from CNBC. It's from an article called Tax Changes Under the Trump's Big Beautiful Bill in One Act. So you can see here on the left-hand side, it's the current law, and then the final legislation. Again, just stop the video at any time, pause the video to take a look at this. And if you enjoyed this video, I think the next video that makes a lot of sense for you to think about watching is this video here, where I talk about 8 things to stop doing so that you can enjoy the journey until you get to retire. Thanks for watching this video. I'll see you in the next one. And sorry for the noise. If you've made it this long, you deserve to know where I'm at. I'm at a Delta Lounge waiting for my flight. I am going to a celebration of life service for my father-in-law, my wife's father, who passed away at 92. Thanks again for watching, and don't forget to watch this video up here. 8 things to stop doing in your 50s and 60s in order to enjoy your journey until you get to retire.